CNBC TV18 presents India Risk Management Award, honoring the new age risk management practitioners.
Hello and welcome to this special chat on risk management during COVID times. And my guest is the Managing Director and CEO of ICICI Lombard, Mr. Bhargav Dasgupta. Mr. Dasgupta, thank you very much for joining me. It's a bit of an irony that we are talking about risk management at a time and in a situation which no one ever envisaged. Who would have thought that we would go through times like COVID? So that's why this chat becomes particularly important. Before I start the questioning with Mr. Dasgupta, I also want to say that ICICI Lombard and CNBC TV18 every year conducts risk management awards where we try to pick the best companies in terms of risk management, and eminent jury does it. So obviously under COVID times, this risk management award becomes particularly important. Okay, Mr. Dasgupta, for an insurer in particular, how is this situation changing? It should have become more expensive for you, isn't it? You should be upping your premiums, isn't it?
If you look at what's happened in different categories of our business, let's say for the corporate segment where we provide cover for, natural hazards or, fire losses or supply chain disruption, etc. Traditionally in India, most corporates have been very focused on buying very limited sets of cover. So if you see the global debate on insurance is whether a pandemic risk can be supported by insurance industry. In India, that debate didn't even happen because in the global context, most companies buy what is known as business interruption covers. So if the business is interrupted for reasons beyond a fire or a natural catastrophe, there is still those covers available and bought by insurance companies in the world. In India, no one buys those covers. The BI covers do not exist for, as we call it, non-damage. BI is not linked to a fire or a natural hazard. It's something that people don't buy. So you don't even have, anyone, expecting a claim because this was not a, fire hazard or a, earthquake or a flood, right? So the bigger question that we have to think about, in retrospect as India is, how do we think about risk and how do we think about protecting ourselves beyond the limited way of articulating our risk that we've been doing in the past?
Okay. Mr. Dasgupta, are you trying to sell this idea then? I mean, it's clearly a conceptual gap if we haven't even thought of it. So are you selling the idea? Are companies receptive to it? Business interruption risk.
So the first point is the reason why, if you see the penetration numbers in India being so low, I mean, we are less than half of China when it looks at penetration. We are, 1/10 of, let's say, US, right? And if you look at insurance density, that is per capita premium that we charge, we earn in India, it's about 1/10 of China. So that shows you the kind of gap that exists in India. And these are one of the, few of the reasons. So if you look at corporates, one of the challenges that we have is talking about some of these, what may have been seen as esoteric covers may not have been seen as required covers. Unfortunately, these things happen once, in a while and really affects your business. So one of the things that we do need to do, and, as insurance companies, we are very happy to go out and provide these covers. There is a global market for, protecting ourselves against this. We as an insurer obviously will buy, covers from our reinsurance market, but these covers are available. And the question is whether we are waking up to these reality. The second question is, the larger question, and this is a challenge for everyone across the world, is how do you insure a pandemic? These kind of events happen and you can pay for these claims, but when it happens for all your customers, then it becomes challenging for anyone. I mean, entire economy has to come together to support, individuals and businesses, as we've seen in terms of governmental action this time. But can we solve the problem to some extent by creating a aggregate pool, let's say come together and create a pandemic pool with the support from, let's say, the government or the policymakers? Because, insurance model doesn't work for covering everyone, right? In our model, we take a small amount of premium and pay for claims that happen for a few. If everyone suffers a claim, we cannot support it because the premium is not enough. So we need some kind of a support. So maybe the time has come for creating a pandemic pool initially with some amount of support, maybe from taxes, to pay for an event like this. And once, this will not happen overnight every year. So after maybe 10, 15 years, the pool will become large enough to support a pandemic event like this. So yes, we can definitely encourage a movement in that direction.
Okay. No, that's the second concept you are throwing on our lap in terms of a pandemic pool. That's, of course, government policy, and that will take time to move because I think the government really is flooded with too many things. But just to scratch the point on business interruption risk management or business interruption cover, has any conversation started? Are at least larger companies showing any response to the idea?
So a lot of large companies do buy damage-linked BI already.
Exactly, fire-linked or something,
fire-linked BI
or robbery-linked.
Yeah, some kind of a physical damage-linked BI. That itself wasn't very popular. The big organizations and more progressive and more risk-conscious organizations were buying it, but increasingly there is a demand for that, and that's expanding. What we still don't think about buying, and as we were discussing, things that are not linked to a physical damage. Let's say a supply chain disruption. And if you see a global supply chain today, something happens, a fire in one of the ports in China can have some implication to your business. So those things are still not very prevalent. Conversations do happen. Some companies do talk about it. But then when these are not cheap covers, because it happens an event like this, it actually is a large payout for the insurance companies. So the prices are also not as cheap as some of the other policies, and that's where at times we struggle. Pandemic
pool, has any conversation started with policymakers?
In fact, IRDA had constituted a committee. They've given a report on the pandemic pool. It basically looks at protecting the smaller MSMEs, because thought process is that's a segment that we can meaningfully, that's a segment that needs more protection. And when we're trying to solve the entire, corporate sector problem, it may not be feasible in the beginning. So let's focus on that strata of corporates. And the whole idea was a small contribution, a pool getting created with support of insurance companies and possibly even reinsurance companies, but initially with a backstop from the government. Because as I said, when 100% of the people claim, as they would in a pandemic, it is not possible for a pool to sustain and support. So at least initial periods, you'll need some kind of a tax support. I completely take your point that there is enough on the plate of the government. There is a limit into the fiscal space. So obviously there has to be some prioritization and thought process on what we focus on at a governmental level. But the concept has been deliberated and a report is already out.
What about individuals, like, people like me and my colleagues? Are you seeing a greater consumer attention to health and therefore more people, queuing up before you? Any change in behavior which may mean more business or even more responsibility for you in terms of more claims?
So the answer is yes to both. We did see a lot more interest in health insurance, particularly in the first 6-7 months of this year, where the concern about the pandemic was particularly elevated. And we've also seen significant increase in the number of claims for the industry, particularly on the health side. The other point that I want to make is that, when it comes to health insurance, the same point that I made for pandemic not being, in a sense, insurable risk. Yes. But as an industry, we took a call that for retail health customers, we will pay for the claim, though the pandemic is not typically an exception. Yeah, and pandemic, as I said, conceptually it's difficult for us to support, by the basic nature of insurance. But we said that, and by the way, some countries, even health insurance claims have not been paid because of pandemic. But we as an industry, took the initiative. We said that we would pay. The authority, the regulator, was correctly very clear and articulated right upfront that even if some company refuses to pay, they clarified it has to be paid. So as an industry, I think we've done whatever we think we could have done at this point. Okay. The challenge that we faced is in terms of the claim side, in terms of a lack of standardization of claims. Oh. So, the similar case, somewhere, one hospital is charging 7 lakhs, some hospital is charging 2 lakhs. That's been a challenge. And this, has been an issue for the long time.
Yes, absolutely.
That's been a challenge. But otherwise, I think we've kind of stepped up to the plate.
Is there a tendency either in government or in this business interruption index, the large corporates, or the consumer level to say that, my God, this is a one in a century thing. I'll just swim across now and not really bother about making this something that will come again?
There is always that tendency among all of us, and the science teaches and the psychology teaches us that people, we do not believe that something bad will happen to us, right? That is a natural human tendency. But the point is that if you, let's say, in India till about 3-4 years back or 4-5 years back, the general belief was that India is not susceptible to natural catastrophes. We have earthquakes, we don't have as many floods. I think that thinking is out of the window. If you see the number of catastrophe events that we've had in this country over the last 6-7 years, almost every year we've had some pretty severe flooding events, if not earthquake. Similarly, if you look at, as I said, the black swan type events at an economy level. I mean, GST was a black swan event, right? 2008. And here in 2020, we are talking about a pandemic, which is probably even bigger black swan. Now, and that time I remember in 2008, we talked about this being 1 in 100-year event. So none of us imagine something as large would happen within, 12 years. I think people are beginning to realize that these things are not as remote as they all thought. And there is much more awareness and sensitivity to risk than we had seen in maybe even 5-6 years back.
Let me take a break. I want to come back and ask you you're also a managing director, not just of an insurance company, but generally as a managing director, there are disruptions to business. So those questions to Mr. Dasgupta on how business should approach risk management at a time of COVID. Back in a minute.
ICICI Lombard and CNBC TV18 present India Risk Management Award, honoring the new age risk management practitioners. ICICI Lombard and CNBC TV18 present India Risk Management Award, honoring the new age risk management practitioners.
Welcome back to this special chat with Mr. Bhargav Dasgupta, Managing Director and CEO of ICICI Lombard on risk management, especially during COVID times. Mr. Dasgupta, I want to now speak about how our lives have changed. You began this chat by saying it is so unusual. Would we have thought that we will chat with you connecting from your home, remotely? Until recently, we used to meet face to face to speak. Now, this has meant a big leap in digitalization, which means relying on, relying on internet, relying on infotech. Along with it comes cyber risk. So, just how are you approaching it as a managing director of a company? And what does this mean in terms of insurance? Can you actually insure cyber risk?
So let me, I'll talk about the cyber risk aspect, but let me step back a bit and talk about what we are seeing overall, right? One is clearly a behavior shift in our customers. In the past, people, were comfortable with some amount of physical services. People were comfortable with interacting physically with people. Now, during the COVID period, we saw a preference for digital. We saw a preference for contactless. We also saw organizations reorganize themselves in terms of people working from home, etc. All of these are, in our mind, changes for the future as well. This is not just an episodic change. We believe this will transform the way we provide our customers with services going ahead, and the way we continue to operate as an organization. So let me just spend 2 minutes on the customer, just to give you a couple of examples. On the health side, since we discussed health, one of the things that we decided during the pandemic was to allow two things. One was e-health, so you can do a doctor consult on the app, which was not in a sense a service that we were offering. It was a paid service for some customers, but given this period, we opened it up to all our customers. We see tremendous traction and positivity around that service feature. Now, going ahead, we will not continue with it. Of course, we will continue with it because it's a positive for our customers. Second thing that we did was insurance traditionally pays for hospitalization claims, right? So you have to go to the hospital, be there for 24 hours. We started providing home-based care on a cashless basis. If you reach out to us, our service providers, we didn't want to do it on a reimbursement basis because of fraud risk. But if you reach out to us, we will provide you a cashless service at home. And customers are very happy with it, because who wants to go to a hospital in a time when there's a pandemic? Will this continue? We believe this will continue. So these are just giving a couple of examples of how we believe customer proposition will change, and we as an industry, as an insurance industry, need to also change to service our customers. The second point that you made about cyber, traditionally as insurance companies or any company, we used to think about the cyber risk in terms of, to mitigate the cyber risk, we used to think a lot about the perimeter security. Once people come inside the organization, how strong is our firewall, how is our monitoring mechanism, what is our threat, the alarm system, etc. But it was all within the organization boundaries. Now suddenly people are working from home. So you have to completely re-architect your cyber security architecture to thinking about the endpoint security as well. And increasingly will be hybrid. Some people will be in office, some people will be at home. And I think that's really been another challenge in terms of re-architecting our security architecture. And increasingly we believe as an insurance company that the cyber risk is going to become a larger and larger component of the risk that all of us in corporate India have. And we need to protect for those.
What has been the ability for you to process claims remotely? I mean, until now, perhaps you did many of your claims remotely, say, an accident insurance cover, a vehicle insurance cover. I guess all of you were already prepared to do it remotely. But now, have you been able to migrate everything to remote? Have there been people disputing your assessment of the damage vis-a-vis theirs? Is remote really working, both in terms of selling insurance and settling claims?
Lata, we are big believers in digital and giving power to the customer, power in the hands of the customer. And, do it yourself, DIY is really, we believe, very empowering. And our experience is whenever customers process or initiate the process on their own, we see much less dissonance. So be it in terms of issuing policies digitally, if you have the email, which mostly you do, I mean, in GI industry, you don't have KYC, but customers are willing to share that with you. So if you have the email, your policy is available to you immediately. You take a printout. In a physical version, when you send it through, post or courier, there will be that 8-9% that will, you'll have RTO, return from origin, etc. You'll not, the policy document won't reach. Even at the simplistic level, it is better for the customer. Coming to your bigger point on claims, look, all of us had that capability. At least we had pioneered this, virtual inspection for auto damages. So you took on your app, you could take a video. It will stream real time live into our claims hubs. Our claims manager would look at it and give the authorization. That was roughly about 20-25% of our policies would go through that. Our claims would go through that process. During the first 1 or 2 months of the pandemic, 100% went through that process because there was no other choice, right? You couldn't do anything physically. Even as we speak, that number is ranging somewhere around 50 to 60%.
Oh,
when people option of going to a physical inspection process,
okay.
I see significant increase in terms of number of people who are preferring the virtual inspection rather than a physical inspection.
Okay.
And our complaint numbers and the dissonances are much less actually.
Oh. Okay. Actually, that leads very nicely to my last question. When I spoke with other company heads like yourselves about what has pandemic left behind on the HR front, there was one gentleman who said, trust. Even after the pandemic goes, I will trust my employees more. Until before the pandemic, we had to have them in line of sight. People worked only when you saw them working. But now you trust. What is your experience? Do you think this trust factor, you just said that, customer disputing your claims are actually falling. So do you think trust is something we have gained from the pandemic?
My personal belief, I don't know who told you that about the employee force. That is completely my experience as well. The entire management, by wandering about, by overseeing someone, looking over someone's shoulder, is probably a thing of the past. And one of the biggest gains that we've had because of this new way of working, of hybrid working, is I believe one is the trust factor. And organizations have to gear up to manage, through trust. Obviously, you trust but verify. You look at what's happening, but you implicitly trust your team in terms of doing their job. And our experience has been tremendously positive in terms of how we've seen our employees shape up on this factor.
Okay.
And the second, I would argue, is a big positive is I think this whole flexi working or digital working actually flattens the organization and is more inclusive. It's more inclusive in the sense that today for, in let's say corporate office meetings in the past, not everyone would travel from everywhere part of the country, right? If it's just a 1 hour meeting, someone would say, okay, let it be. Today, every stakeholder who's relevant for that meeting can join without any effort.
That's right.
We can do large town halls with people in across the country at the drop of a hat, right? So I think there's a lot of positives in terms of inclusivity and flattening of the organization, which I believe culturally can be very positive for organizations that continue to adapt, or adopt this way of working.
This is a great learning. Mr. Dasgupta, thank you very much for a very enriching conversation.
ICICI Lombard and CNBC TV18 present India Risk Management Award, honoring the new age risk management practitioners.